All right, so this is the SPY on the 1 minute chart, all the way up, all the way down into the depths of hell, and then all the way back up, and then all the way back down again, and then into the close, we ripped to the upside. So a lot of things going on today. So in today's video, we're going to talk about what the next steps are for the market. We're going to use the crypto market as a gauge to see where the stock market can go. If you guys enjoy the content that I post, make sure to like, comment, make sure to subscribe to the channel, and put on the bell notifications so you get notified whenever I post videos as well. And yeah, without further ado, let's get started with the video. All right, number one, first of all, today was another pretty solid day trading. We only traded the QQQ today, and we made a lot of money. Everyone basically did really well today. You can go ahead and check the profit and losses. You could check the testimonials. This is a completely free Discord server if you want access to basically where all of us are speaking and sharing trading ideas, and we just have a very good environment where everyone here is trying to learn and become better traders, and it's working out really well. So the past few days have been pretty amazing. Not the highest frequency of trades, but they have been solid green days. And during these choppy days, that's all we can really ask for. So yeah, it's been pretty good. And if you want access, the link is going to be in the description, in the bio. Go ahead and click that and then send me a DM on Discord. Things should be pretty good. Okay, so basically the the entire stock market looks bearish, right? The indicators are not bullish setups at the moment, but I'm going to try my best to try to explain why, even though the market is showing us bearish setups, that we still could have a bullish retest or bullish day intraday in this week. All right, so yeah, let's get started with that. All right, number one, we can now see that the lower standard deviation, the lower Bollinger Band on the SPY is pointed lower. So that means that it will take a lot more for us to fall dramatically. So as this level is falling lower and lower, that means that the SPY needs to have a dramatic move to the downside for us to close outside of the lower level of the Bollinger Band. When we close outside of the lower level of the Bollinger Band, that signifies an overextension to the downside. And when we are overextended to the downside, like we have been multiple times in the past, those tend to be good buying opportunities. But now the fact that the Bollinger Band is also falling lower, it basically mathematically becomes much harder for us to become overextended to the downside. What we would much rather have wanted to see is, what I was showing before, the lower Bollinger Band screaming to the upside, which basically signaled a bit of a bottom. But now what we're seeing is the Bollinger Band is reversing downwards. So that is bearish. Okay, so that's number one. Number two is this MACD indicator. So what we can see from the MACD is that we are looking to cross above. As you can see, the MACD had a bit of a bottom here in the short term on April 12th, and we've been curling upwards since then. Okay, so this slower MACD line is a signal line, and when this white line crosses above, that's supposed to be bullish. All right, but what we're seeing now instead is we're making newer lows on the stock price itself, but the indicator looks bullish. Usually when that happens, that's very bearish. Okay, and that coupled with the fact that the Bollinger Band is also falling lower, also coupled with the fact that the SPY intraday fell very low as well, and we would have closed around 437 today if it wasn't for the last 10 minutes of the trading day today. So it looks so essentially when this happens on the market during normal trading conditions, because this isn't really a normal trading condition. Last week and this week we've had a lot of stagnant volume, not a lot of momentum. But normal trading conditions, when the indicator is basically piercing upwards, like it's like a pincer. It's moving upwards like this. The stock price should be moving upwards in conjunction to this, because when we have a cross above, that is supposed to be bullish. But again, the fact that we're crossing down lower and making newer lows intraday while the MACD looks bullish is not a good sign. So now what most likely should end up happening is we should retest basically that's assuming if we break above 440. What should end up happening is we should break above 442 and then retest 444. From here, we'll get a better understanding of where the MACD is going to be. And even then, it would give a better opportunity for people to go short. So there's multiple places where bears can rebuy into shorts. Obviously, we've been buying into shorts for quite some time, and since we are trading below this very important trend line here, our bias is going to be bearish. All right. So also given the technical indicators, but a short-term bounce to these levels is completely normal, especially given the fact at how obviously bearish the indicators currently look. Usually when they look this obviously bearish, there is a reversal. So if something looks super, super bullish, usually the market doesn't give it to us as easily because they painted it so vividly for us. They want to do the opposite the next day. So just keep that in mind. If we do end up falling lower, right? So this is what I'm thinking. 442 to 444 would be a better opportunity to go short for swings, right? But of course, we have to monitor how that plays out during the day, blah, blah, blah. If we don't end up bouncing and this MACD continues to move upwards and the SPY continues to fall lower, if we break down below 433.50 and the MACD is still showing strength and, we're still crossing upwards, we haven't yet crossed above though, and we're breaking down below 443.50, that is a huge warning signal, and that is basically going to show that we can easily come back and retest this 425 to 429 level very, 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 very quickly. Because if we are breaking below major levels of support, while basically the main indicator that's showing us bullishness, if that's not holding us up and we break down below 433.50, then all bets are off. In my opinion, that's when things should start getting really, really aggressive to the downside. This consolidation that we've seen in the past few days would just be that. It would just be a consolidation. And it would, in hindsight, this would have been an amazing opportunity to load up on shorts, especially if we break down below 433.50. So if we break down below that level, either tomorrow or on Wednesday, keep that in mind, especially for day trading. That level is going to be very, very important. All right, so there's that for the SPY. Let's take a look at the IWM. All right, so the IWM, the biggest loser today. We had a red day, down 0.67%. All right, the MACD on the IWM crossed above already, which is supposed to be very, very bullish, right? But we had a red day. This is not a green day, right? So that is obviously very, very bearish on the IWM. If we break down below this 0.786% fib level here at 196.24, then that is going to be pretty bad as well, because the lower Bollinger Band also on the IWM is pointed lower. There's a lot more room to the downside on the IWM as well. So this doesn't look too good. All right. But, in terms of resistance, if we were to break above 199.50 is going to be a major level of resistance here. If we can end up showing strength alongside the SPY and the NASDAQ, sure, that'd be great. Adapt to the market conditions, but overall, our bias is bearish until the SPY breaks back above 450 to 452 area. And this MACD, and what's happening with the stock price is just not bullish at all. So there's that for the IWM. Let's go ahead and take a look at large tech stocks and then the NASDAQ. All right, taking a look at Apple. Apple came back and fell to a very major level of support here. at 163.76. And number 2, we can see the MACD was curling upwards, but now since we had multiple red days, the MACD is not moving upwards as dramatically, which is bearish. All right, so if 163.76 doesn't hold, that is very, very bad for Apple and for the rest of the tech sector. We could see that the Bollinger Band is still creeping upwards, which is not the worst signal, right, for Apple. You could see this, but overall, it's not a huge bullish signal either. All right, so there's that for Apple. Let's take a look at Google. Google was one of the 2 main tech stocks that was showing the most weakness. And you can see that now the lower Bollinger Band is much, much lower. The MACD is moving higher, yet we barely had a green day today. We need to see a lot more strength out of the large tech stocks. And I think we should be able to see that. Because if we end up just collapsing, that would just be a really, really bad move, in my opinion. It wouldn't be a healthy market environment. What would be better is if we got a better opportunity. And selfishly, I would like a better opportunity to go short at higher levels, especially given the fact that we know which direction the momentum is going. But again, SPY needs to break above those major levels of resistance at 442 to 444. But right now, these tech stocks look very, very weak. But they should end up bouncing. That's basically my thesis. So Google is still showing there's a lot more room to the downside with the Bollinger Bands. The MACD is moving upwards, which technically means that it should be bouncing. But we're not seeing much of that right now. So there's that for Google. Similarly to Microsoft. So Microsoft and Google were the biggest losers. And Microsoft's lower Bollinger Band is just vomiting to the downside, which is basically showing that there's a lot more room to the downside. And also the same concept with the MACD. The MACD is showing strength, yet that strength is not permeating in the stock price as much as it should, which is the issue currently. All right, so Amazon. Amazon doesn't look as bad. It's curling up on the MACD. It looks like it's about to cross above because similarly to the IWM. So, yeah, just keep that in mind for Amazon. Amazon's MACD is most likely going to cross above tomorrow. And we're going to need to see how it trades above today's high at 30.80. And then how we're going to need to see how it trades around these levels up here. Basically at around 31.20. So, yeah, if Amazon can break above these levels and definitively show strength above these levels, that'd be really good for the rest of the tech stocks as well, because it's one of the strong ones at the moment. So there's that for Amazon. Let's take a look at Tesla. Tesla has earnings on Wednesday after the close. Tesla also looks strong at the moment. So what we're most likely going to end up doing is so next week, many tech stocks have earnings. And usually what ends up happening is into the run-up of the earnings. So say, for example, a company has earnings after hours. That entire day, that company is usually bullish. The price action is bullish. So if that is the case with Tesla specifically, moving forward next week, we're going to be bullish the NASDAQ like aggressively. Because if Facebook, Google, Amazon, Apple, all of these stocks are also going to act in the same way, we can use Tesla as a good gauge for that as well. So just keep that in mind. Next week is going to be very, very important for earnings as well. But yeah, Tesla looks bullish. Basically, the large tech stocks they should be curling upwards. They should be looking very, very bullish. But we're not seeing huge bullishness out of them. So let's go ahead and take a look at the NASDAQ to get a better understanding of what's going on. All right, so once again, the NASDAQ almost closed below this very, very important zone. We reclaimed the zone, and it looks like in the after hours, we're trading above it. So this zone is 338 to 441. And the MACD once again is curling upwards. We had a green candle here, but again, this is not the most bullish setup, right? We could have a bit of a green candle. We could come back and retest 341 to 342 on the NASDAQ. That'd be great. But again, the overall momentum is pointed downwards. Until the NASDAQ can reclaim 344, and until the SPY can reclaim 444 to 445, these are just good opportunities to go short. Every single pop that we see is just another good opportunity to go short. So just keep that in mind. This is not a bullish setup. This RSI being flat here is not a good sign. It means that there's a lot more room to the downside. The Bollinger Band moving lower here as well, not a good setup. There's a lot more room to the downside. So overall, the entire stock market is showing weakness, right? We could have a green day tomorrow or into Wednesday, but overall, this is not showing extreme momentum to the upside. So until we break above key levels of resistance to the upside, our bias has to be bullish. Our bias has to be bearish. So just keep that in mind. There's that for the entire stock market. Once again, if you enjoy the content, make sure to subscribe, put on the bell notification, like the video, do all that good stuff. Now, let's take a look at Bitcoin and the crypto market. All right, so this is where the fun begins. So I was showing on yesterday's video over the weekend that even if Bitcoin were to break lower below these lows here, the RSI was still showing divergence. So Bitcoin right now is obviously at 46, all right? But while Bitcoin was at 38,000, while it was trading down here, the RSI was still above this level here. So you see this sharp move down here. You could see the RSI level right here. It was above 35.37. We were trading basically around right here, right? So I think we were trading around like 37. So the price of Bitcoin was lower than these prior lows, yet the RSI was higher. So once again, the price traded lower, but the RSI was trading higher. So that is positive divergence on Bitcoin. So that's why I was saying, even if we were to fall below this level here, or even if we ended up falling into this zone here, that would be bullish. And basically that is playing out pretty well. So now, essentially what we can see right now is just pragmatically, regardless of what we saw in the stock market, right now on Bitcoin, what we've been seeing multiple times throughout the past few months is when Bitcoin looks bullish, the stock market should be looking bullish into the close. And we can see that right now. So Bitcoin is engulfing these prior candles here, and this is a very strong move out of Bitcoin. So that's why I'm saying that even though the stock market looks very, very weak, that's not a guarantee that the market is going to end up being weak as well, because right now we can see Bitcoin is showing a lot of strength. So that's why maybe we can end up retesting these highs here at around 42,500, or even come back here to up about 43,000 on Bitcoin, because right now the setup looks very, very bullish. And of course, what I was showing as well over the weekend, the MACD, to get the MACD signal line, you can see the slow acting a line here. To get it to start moving upwards, the momentum to start moving upwards, we need this white MACD line to be very overbought. So this needs to be very overextended to the upside for this line to start catching up. So it moves up very slowly, blah, 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 right? But this white line needs to be very overextended to the upside. And for that to happen, Bitcoin absolutely, like, it needs to continue moving upwards aggressively. And we need to have these strong moves out of Bitcoin if we want to see the overall momentum of Bitcoin to shift upwards as well. If it does not do that, and during this week we end up breaking lower and comfortably start closing lower, then we're definitely going to see 37 to 38,000. But right now, the momentum is starting to shift upwards. And we can see that right now, just pragmatically, not including like the overall bias, the weakness, everything. Just pragmatically in the short term right now, Bitcoin looks like it's about to close very bullishly. There was positive divergence on the RSI, and the MACD is also showing this is the remnants. This is basically what we need to see the MACD this is what we need to see Bitcoin and the MACD do if we want a strong move to the upside. And basically it's playing out perfectly. So there's that. That's why I think the market should be bouncing into Tuesday and Wednesday specifically. If not, that's fine. But again, Bitcoin looks bullish, but the stock market looks bearish. So just keep that in mind. We're not holding anything overnight. I hope you guys have an amazing day. I hope you guys enjoyed today's content. Make sure to subscribe, do all that good stuff, like the video, and above all, make sure to have an amazing day. I will see you guys tomorrow. Thank you.